Right below here, we mentioned that Annuity Care Plus rider, the ability to continue the benefits for an additional 36 months or lifetime. Here is an example here on a 72-year-old that had a $103,500 single deposit, $3,000 a month. It would be an annual cost of $1,830 to have a $3,000 a month coverage, and this would $3,000 would grow at 5% compound inflation. So that gives you an idea on the cost. Next page I want to show you is how the annuity care works over the years. So we'll go into the guaranteed side. We started out with $103,500 at a 4.05% rate. The long-term care fund, this is the third column over from the right under the guaranteed interest rates. Long-term care fund, as you can see, it's growing at 4.05%. That is guaranteed for the first 5 years. So if you see at the end of year 5, it's worth $126,227 in the long-term care fund. If you look to the right, this is the cash value fund. In year 5, it's worth $119,985. Now the difference there, that's the two interest rates. The cash grows at 3%, and the cash fund is your real money. Those are your true dollars. And on the left is your long-term care fund growing at the higher rate of 4.05, worth $126,227. If this particular client needed to go into long-term care at this point, their monthly benefit would be 2.9% of that $126,227. And we'll see here on a separate page in year 5 what that value would be. Right here, I'll just get this up. Year 5, age 77, the monthly long-term care benefit has grown from $3,000 to $3,659. So that gives you an idea of what kind of growth you can see in your monthly long-term benefit. From day one, it was worth $3,000. After 5 years of growth, they were going to claim their monthly long-term care benefit is worth $3,659. Below that is the 10-year period. So if they went 10 years out without not needing long-term care, in 10 years their monthly benefit would have grown to $4,241. Okay, let me just go back here to the slide. Okay, just hold on a minute. I'm just going to get back to the desktop, but it's not going back here.
The top here, look for the tabs.
There we go. Okay, perfect. Okay, so there's a win-win here with the annuity care. You have the ability to 1035 exchange or use new money and move this over to annuity care. You're going to have a guaranteed 3% growth on your cash. You have a longer or higher interest rate for your long-term care growth in the annuity. All these premiums are guaranteed. They're safe. They will have the ability to withdraw this for long-term care on a tax-free basis if they need qualifying long-term care expenses under the Pension Protection Act. The way this works, let's talk about that. Let's say they do need to go on a long-term care claim. What happens is it goes from a LIFO contract, meaning the interest coming out first, to a FIFO contract. So the basis is what's going to come out first. So first you have your basis being deducted to, and then eventually you get to the interest at the end, which will also be withdrawn on a tax-free basis. It will not be taxable under the Pension Protection Act. Now, here's something I just want to point out here. You may have heard of a lot of fixed annuities, and when you do your annuity sales, that a lot of these have nursing home waivers or nursing home riders. That is not the same as being a Pension Protection Act compliant annuity. To be registered on the Pension Protection Act, there's the guidelines you have to follow. And one, the annuity has to provide what's called an outline of coverage. And under that outline of coverage, it'll fall under the HIPAA guidelines, which allows you to access these benefits tax-free. A lot of these annuities with the nursing home riders or waivers, they are not filed under the Pension Protection Act. And so, yes, you may be able to withdraw a large amount out to cover long-term care costs, but it would be taxable to you. Under a Pension Protection Act filed annuity, you'll be eligible to withdraw those premium or those cash values out tax-free. And, of course, the other is falling under HIPAA, the guidelines, meaning requiring assistance for 2 out of the 6 activities of daily living or for the severe cognitive impairment. So that is what annuity care will have. It's filed under the HIPAA guidelines and it provides an outline of coverage, so you know it is definitely a PPA-compliant annuity. Now, because this is a planning product, this is not just for anyone that wants to sign up to have. There is underwriting that's involved. It is simplified underwriting, meaning it's just a phone interview. We do not do exams, we do not do labs, or we do not order medical records. It's based off of a 15-minute phone interview. Typically, their clients are contacted within 72 hours of when the application is submitted to us. And usually within 2 days after that, we'll have our underwriting decision on whether they're approved or not. Now, I will say that in terms of underwriting, it is much more lenient than that of a traditional long-term care policy. And reason why, because a lot of this is your clients funding with their own money. So with that, you're able to have a lot of people that normally wouldn't be approved for long-term care are finding you're able to get policies available to them. So you're opening up a great marketplace for that as well. Okay, let's see here. So identifying the clients, typical age groups, 50 to 85. We see a more focus from ages 70 to 85. And like I mentioned, with fair or better health, concerned about preserving the assets they have accumulated, identifying funding sources. You can use CDs, savings, money markets. The big ticket is existing non-qualified annuities. I mean, it really is a great conversation when you can tell your clients, say, hey, this annuity here, if we're able to take this and move this over and turn this from something taxable to tax-free, that's going to pique some interest. They definitely want to hear what you had to say and how that works. So it really gives you a great opportunity and great talking point for a meeting with your clients there. All right. Now, a little bit about One America. We're actually a very conservative company. We have strong financials. We are AA- with S&P, A excellent with AM Best. If you'd like any information on our financials, feel free to request that from Nicole. I can provide her with anything that she would need in terms of information about us. Like I mentioned, we're very conservative, so we did not have any of the risky assets during the time during 2007, 2008. We did not receive any TARP money. We were very financially sound, did not have to be involved with any of that part of it. In terms of contacting, we work in complete partnership with Nicole and her group at Provada. So whether you need information from either myself or representatives at One America or from Provada, it's all a partnership. You're not crossing over any lines. We're all here as a partnership to provide services to help you offer annuity care as well as the other products that are available to your clients. So anything that you need, you can always start with Nicole, and Nicole needs anything, she can conference me in or any of the other employees that we have to help you with all your case design and questions. All right, at that moment, that's pretty much most of the presentation. If anyone has any questions, I can go ahead and open it up. If anyone would like to ask anything, we're more happy to answer any of your questions.
I have a question.
Sure.
Is this available in Florida?
Yes, it is, actually.
It is?
Yes.
And on the underwriting, like I just had someone turn down for LTCI, and they talked to me about an annuity. So I'm thinking this is the perfect, option for them. They were turned down for just a musculoskeletal, and she really is fine. How strict? I mean, do they get medical records and everything?
No, we do not actually. It's just a phone interview.
Just a phone interview. Okay.
Yeah, so you won't have to worry about any type of traditional physical underwriting. It would only be a phone interview. And it's pretty common. Quite often, I'll work with producers that contact me because their clients were turned down for traditional long-term care, and we have been able to get them approved for annuity care. Now, I wouldn't say to do that as a regular practice because not everyone is going to qualify for annuity care even though they've been turned down because they still have to be somewhat healthy.
Is there any way of getting an underwriting guide?
Yeah, absolutely. Can give you information on some of the knockouts.
I mean, like diabetics, things like that.
Yeah, actually, we diabetes is okay as long as it's controlled, and as long as they're not severely overweight, and there's not any combination of other serious conditions. So, for example, someone maybe recently had cancer, they have diabetes, maybe they had a heart condition. When you add those three together, then we wouldn't be able to offer coverage.
Okay.
But no, diabetes is perfectly okay as long as they are in control.
And it can be an insulin dependent as long as it's controlled.
Yeah,
and
absolutely.
Their A1C is where it should be and all that.
Yeah, exactly.
Okay. So how do we get
penalty? 100,000 in, 24 months later, you want to take all your money out. How much do you get out?
Oh, good question. There is a surrender schedule that will apply. So it's not, let's say they did 100,000 and it's like you mentioned, 1 year or 2 years later they wanted to get out. They're not going to get at least their 100,000 back. It is not a return of premium. There is a surrender schedule. It varies in the states, different states, but for California, it's an 8% surrender penalty the first 3 years. So typically the crossover point is somewhere after the second year is where they've made up enough interest that minus the surrender charge, they would walk away with at least what they started with.
Okay.
Right. And you'll always, if you ever get an illustration, it'll always show you the surrender schedule as well as the cash surrender values in any given year so you can get an idea of that.
How do you get all this information?
Well, you can start with Nicole at Provada. Any information you can request, she'll have it herself. If she needs anything else, she can always contact me.
Okay.
And I can provide anything, or if there's another conversation that needs to be had, I could more than happy to do a conference call. No problem at all. The full resources available to you.
What's the commissions on this?
That is going to be run through Provada.
Okay.
It varies on ages and different groups, but that will all go through. You can get that information from Provada.
Okay. Sounds great.
Yeah. Any other questions?
And also, just so you all know, we will have this webinar posted under webinars on our website. So it's actually go to sales ideas at the top, and you'll see the icon for webinars. And this will either be under annuities or long-term care, since it's kind of both. And then you can find out more information, like get a spec sheet on this particular product right on our website again. So it would be in your dashboard. You'd click on annuity rates, percentage sign, and within there you're going to look for the linked benefit annuity. It's its own spreadsheet, and there will be spec sheets on this particular product, and it does give commissions on that sheet.
And what's the web address again?
www.provada.com. You do have to register if you haven't already. Once you register, I need to give you access, to the client center. And then as a client of ours, you would always go into the client center, and that's where all the tools and resources are held. And each person has a dashboard, and that's the 15 most used icons, which we found out from our other websites. So one of them is annuity rates. Within annuity rates, you have everything from equity indexed annuities to regular multi-year guaranteed annuities, and one of the spreadsheets happens to be linked benefit annuities, and this product's on there. There are others, but this is my favorite.
Okay. And this is called Annuity Care.
Right, Annuity Care. Okay. Well, it starts, if you're thinking of some particular clients in mind throughout the webinar that you might work, it starts with just getting an illustration, and feel free to contact Nicole or anyone at Provada, and we can start from there. That way you can get some figures for your clients and see what we'll be looking at in order to present to your client.
Yeah, so if any of you do want an illustration, you can send an email to newbusiness@provada.com, all one word, and, we'll get those illustrations out to you. You can contact me directly at extension 115. So either way, we'll be able to get you something quickly.
Great.
All right. Last chance here. Anyone with questions? No? Okay. Well, thank you very much. I appreciate you being available and sharing your time with us today. And if you have anything else, please feel free to contact Provada, and we'll provide anything that you need.
Thank you very much, James.
Thank
you.
you.
Bye-bye.
Bye.